Welcome back to my channel, fellow investors. My name is Victor, and I'm an individual value investor. I like sharing my analysis on YouTube and sharing my point of view, my individual opinion on stocks and bonds. In this case here, I'm going to be evaluating TSM. This is the world's biggest semiconductor foundry. They produce products that help companies like NVIDIA, Broadcom, Apple, Samsung. Many of the world's biggest electronics manufacturers depend on TSM. TSM is located in Taiwan and has been operated really well for many years. It's a big success story. As is the case with any video, I've been an investor in TSM and I'm going to evaluate TSM to see if it's a good investment at this time. By no means is this financial advice or recommendation to buy TSM or any stock that I ever cover. It's really just sharing with you my investing journey, and I hope you find it interesting. TSM has been around for a long time, and it's really a high growth success story. I owned the stock for multiple years, and I sold the stock a couple years back. Overall, it was a really successful investment for me, and I was happy to own the stock. I'm very satisfied with the return that I got from TSM. They, along with many other companies, had a big downturn in the stock price. The semiconductor industry is cyclical, meaning that there'll be a couple of boom years followed by a couple of years that are not very good. And they certainly went through the not very good years and now are beginning to rise. Is the stock a good buy right now? There's a lot of AI hype out there. And I think TSM is a really good barometer to see how AI is real for a semiconductor industry. The TSM produces semiconductors for a long list of the world's best companies, technology companies. So I'm going to look at their earnings that were just released today and see how TSM performed and see if I can get a broader picture of where the AI market is relative to the semiconductor industry. Let's get into TSM. As an active value investor, I've created my own process to evaluate a stock and see if I want to buy shares or if I want to stay away. It involves a couple of areas that are really important. The first one being the company. I have to really buy into the company. I have to be willing to be a part owner in the company, like the industry, like the management team. I just need to be 100% in on the company. I like their future story. I like where they're headed with their products. Or maybe it's a value that I can't resist. It's a great company that's been beaten down. In this case here, I'm going to look at TSM. I'm going to evaluate how their management's been doing, what the strategy is for TSM, and see if I buy into that strategy. Next is the balance sheet. Is the balance sheet in good health? Is it problem riddled? Do they have too much debt? Because it could be a really good company with a terrible balance sheet. That company can go bankrupt. That company's probably going to be limited in their growth because the balance sheet could really enslave a company and force it to pay all its free cash to all the debt holders. So I don't want that. Next is the discount on the stock. I'm an active value investor. I don't like paying premiums for stocks. I actually like paying a discount on a stock. So I'm going to calculate my own value of TSM and compare it to today's stock price to see if there's a discount available on the company. Based on the information I gather, I make a decision whether I'm going to buy shares of TSM or stay away. The story behind TSM is just a hard-working group of people putting together a great company and following through on the business plan. They set off to be a leading foundry, and they certainly achieved that goal. They became the largest foundry in the world, trusted by some of the best companies on the planet that depend on their chips to be produced by TSM. Overall, it's just a great success story. You can't talk about TSM without talking geopolitical issues. And as you may be aware, Taiwan is a disputed territory that the Chinese believe is still part of China. Taiwan would rather be an independent country altogether. The US supports the narrative that Taiwan is a separate country. I don't think that there's going to be a big conflict where China tries to annex or take over or begin to control Taiwan, but it is a risk factor that could happen. The territory is in dispute, and China continues to communicate that, hey, Taiwan is a part of China. We are not relinquishing that territory. And Taiwan continues to speak the narrative that, hey, we're an independent country. I'd like to see Taiwan be independent. I think it's a real successful country. I think their economy is doing well. They're growing. And that's a good thing. I always hate to see a good thing be ruined. Not sure China would ruin it. Pretty much like Hong Kong, when they took over Hong Kong, they did not ruin the Hong Kong economy. Maybe the same thing would happen if they annexed Taiwan. We'll see. Needless to say, all that is just a risk factor. I'm going to apply a higher discount rate on my valuation because it is a Taiwanese based company, and the tension between China in Taiwan exist. TSM announced their earnings, and the earnings looked really good. I wanted to go over the details and share with you what I'm seeing. The income statement that TSM provided in their earnings release looks really good. The company grew their top line revenues. Always a good sign when a company grows their revenues. In fact, TSM grew their revenues by 12.9%. Really good revenue growth. Their earnings per share also rose 8.9%. So the income statement looks excellent. If they can continue on that growth trend, TSM is going to be valued far more. The balance sheet also improved. The amount of cash and marketable securities on the balance sheet went up 31.6%. Really nice increase. And their long-term liabilities and debt did not go up as much. It did go up 16.9%, which is a pretty good increase, but their overall cash increased significantly. Overall, TSM has far more cash than they do debt. So their balance sheet's very strong. The statement of cash flows for the first quarter followed the positive trend. It also increased by a good portion. And the overall net free cash tripled compared to the same quarter in 2023. It's a very good sign. One of the big concerns I had in 2023 around TSM was their lack of free cash flow. They weren't generating a lot of cash from operations, and they were spending a lot of capital in the business. So it left very little free cash to give back to investors. So it's good to see that they're beginning to grow their free cash flows significantly. Looking at where the TSM stock has traded for 5 years, if you bought the stock 5 years ago and own it today, you'd be up 197%. Very good return. You can see that there's been a lot of volatility over the last 5 years. It goes back to my saying as a value investor is you can look at a great company and wait for that stock price to be at the right level to invest. And that was certainly the case in the 2019, 2020 era. I bought the stock way back when, and the stock rose substantially. You could have earned about a 250% on TSM if you held it for about 2 years back then. The stock, along with the rest of the tech industry, really had a big drop in 2022. It dropped more than 55% of its value. If you look at the low that it was established in 22 up to this point now, substantial gain at 109% since the low point in 2022. So there's been a lot of volatility. Volatility is my friend as a value investor. I could look at a company that I just really believe in and wait for that stock price to drop and buy it at a discount and then watch that stock rise over time. TSM has a market cap of $625 billion and it has revenue of $70 billion. So you're paying about 9 times revenue for the company. It has good net income, and their forward PE is 23, which is a reasonable PE for one of the best semiconductor companies out there. Many analysts cover TSM, and they have a strong buy rating overall. They expect as a price target, the average price target puts the price target 15% higher than the current stock price. They announced their earnings today, and for some reason, the stock is down 5%. I believe it's the comments that the semiconductor industry is not going to grow as fast as people would like. I think the AI story is really interesting, but AI chips are only a fraction of what semiconductor companies produce. Everything else goes into microwave ovens, automobiles, all kinds of different products that have a lower cost chipset. And those are the products that there isn't strong demand in right now. So I think the AI hype may have lost some of its energy because a player like TSM is pointing out that, hey, AI is interesting, but it's not going to be everything to semiconductor companies. And TSM is proving that. They've announced a very positive earnings report, and their stock's down 4.8% at this point. So that was really interesting to see. Year to date, the stock's up 29%, which is very good. And over the past year, it's up 50%. So it's a total winner over a year and year to date. One of the things that I really liked about TSM is their growth rate. If you look at their growth rate in 2020, 25%, phenomenal. They were already a very big company. And if you look at 2021, great growth rate and so forth. But in 2023, there was actually a loss of revenue. So you see where this industry is cyclical. You have good years, and then you'll have some bad years. And this income statement history shows that cyclicality. Earnings per share, it took a big hit in 2023 for TSM. They were down substantially, but in 24, they're really bouncing back. They're growing by 21%. So that's really good to see. And it's expected to keep growing. 25 and 26, the growth in earnings per share should be there. But then they're expecting the cyclicality to come back. And in 27, they're going to have a down year. So we'll see where things play out. But overall, I think the earnings per share story for TSM looks really good for the next couple of years. I estimated the value that I believe TSM shares should be priced at by using free cash flows and discounting those free cash flows that I project the company is going to produce in the future, and also discounting the earnings per share that I believe TSM is going to produce in the future, getting down to a net present value of those free cash flows or those earnings. And I got to an overall premium of 43% on TSM. That's a substantial premium. The biggest drop in value that I've seen in TSM over the last 5 years is free cash flows. Free cash flows this year and last year are only a fraction of what they were about 3 years ago. And those free cash flows are not expected to be much higher in the next couple of years. As you may have heard, TSM is looking to build a foundry in the state of Arizona. And that foundry is going to bring more capacity onshore to the US, but it's also going to consume a lot of capital. And that capital is going to consume a lot of free cash. Having said that, the valuation that is based on free cash is pretty low on TSM. And therefore, I calculate that the stock is currently being sold at a premium of 43%. So let me go through my process to make a decision on whether I should buy TSM shares or not. And first, it's all about the company. Do I like the company? Do I want to be part owner? Do I believe in their business? Do I like the industry? Do I like the management team? And it's yes to all the above. I have great respect. I think TSM is a great company. So I'm going to give them a full check mark on the area of company. I really like the company. Balance sheet. Is the balance sheet strong, in good health, free of big problems? The answer is yes for TSM. They've got a war chest of free cash and they have very little debt. So their balance sheet's really strong, really well disciplined company that's maintained a very strong balance sheet. And last, is the stock price discounted? And the answer is no. And that's a big showstopper for me. I'm willing to pay a fair price for a great company, but in this case here, that's being sold at a premium. And there's that international risk for me, especially with the company being located in Taiwan, that I need to be compensated with some type of discount on the stock price. So those factors lead me to just put a sell rating on TSM. I'm not a buyer of TSM stock. And again, this is just my opinion. It's how I view the company, and it is not a recommendation to buy or sell TSM. Price is what you pay and value is what you get. I've heard Warren Buffett say that many times, and it certainly applies with TSM. They're a great company, no doubt. And I've owned the stock before and I was happy to own it. But I need a discount. A good discount would really push me to buy a stock, and that doesn't exist in this case. That's my opinion on TSM. I hope you found it interesting, and I really appreciate you watching.